I'm excited about the topics we have today. So, this is the Two Founders podcast where we talk all about startups and other business news because we're interested in company structure, sales, and that sort of topic.
And this week has been special in how not delivering your promise can result in significant losses. And there is like the case of Microsoft stock going down 20% and creating a $650 billion market gap.
Wow, that's a huge, yeah. I'm wondering why that's happening. So, and I'm not talking about the particular news per se, but I'm gonna talk a little bit about angel investors. Who are they? What's their personality like? Just a run through. So we'll see where that takes us.
We can start with Microsoft. The stock of Microsoft went down 20%, and given their market cap, that created a hole of $650 billion in the market, American dollars. Now, $650 billion, just to give you a frame, if today you would have a company worth that much, it would be the 19th biggest company in the world. It would be bigger than Johnson & Johnson, the pharma company, and it would be bigger than Coca-Cola and Netflix combined.
Oof. For real? So they lost 650 billion. Wow, that's insane. You can't even consider that's like several countries worth of BNP, I feel.
And all that is due to not delivering the promise of AI. So, as some of you know, in 2023, OpenAI board and Sam Altman had a bit of a scuffle. Like the board wanted to remove Sam Altman as CEO, and Sam Altman didn't want to leave, and then 700 employees out of 770 threatened to leave OpenAI if Sam Altman would leave. And at the same moment, Microsoft said, you're all welcome here. We can employ you or we can buy OpenAI. And mind you that Microsoft is today one of the biggest shareholders in OpenAI, right? So since then, the public market has viewed Microsoft as this AI forward leader. I remember that back then in 2023, Google got a hit in their stock because they did not react to it fast enough. And if you remember back then, they did not have Gemini. I believe they still had a model called Bard. Google, I'm talking about Google, that was nowhere as good as the latest model of ChatGPT. So there were like a lot of back and forth of this. But Microsoft kind of was winning. They got a contract for Azure Cloud with OpenAI that was exclusive, right? They had Copilot ongoing. They had all that infrastructure already for workspaces, right? Companies use email, calendar, Teams, and all that package. So Copilot just arrived with it. Putting it all together, Microsoft was basically in a great place, right?
Yeah, it sounds like it. Sounds like a really good position. So, where did they take all these employees from OpenAI? And
No, they did not.
sorry, I
Because
jumped the gun.
no, but
I
OpenAI,
actually don't remember what happened in that situation. I just remember him almost quitting, but then he came back to OpenAI and so on. But
probably that needs like an episode on his own or what happened.
okay, yeah.
But for short is that let's say that he did not leave, right? He stayed where he was, and the board was kind of half of it was replaced, and the company continued as business as usual, so to say, but with Microsoft in a stronger position, both fiscally with like specific contracts, infrastructurally because of the contract with Azure, and also in perception from the public market, the ones that own the stock of Microsoft. Since then, though, there was a loss of trust from the public market perspective. First off, Copilot, I don't know if you ever used it, but it's still of today, it's nowhere near the frontier models. So now I'm talking about Anthropic models, right? Like Claude, Sonnet, Fable 5, or the latest ChatGPT, like GPT 5.5 and so on. Even Gemini in some benchmarks is really close to that. Copilot is nowhere to be there. Right. So that's problem number one. Problem number two is that their CEO announced CAPEX, so capital expenditure investment, of 190 billion in infrastructure. And they're marketing it as an AI move. But when you go and look at where they're spending it is in Azure cloud, right? So they're investing it in infrastructure. And AI and infrastructure are two different things. The margins on infrastructure are nowhere near the margins on AI and software. So that move was seen for what it was, is not a You're not investing to actually scale your AI business. You're investing to not burn out from the cloud, right? You need more hardware, you need better chips. And another critique that I read on the New York Times is how, yes, Microsoft is still hiring AI talent, and you can find in their careers page lots of jobs, dozens of positions with AI, machine learning, deep learning, and LLM experts. But they kind of waited too long in the AI race and war compared to like some packages of Meta packages or Google, Anthropic, and OpenAI. They are paying like millions, multiple millions in stock options, contracts to retain talent, right? And Microsoft just arrived a bit later in
Yeah.
this game. So overall, the perception is that Microsoft is a software company, but they did not deliver the promise of we're going to develop a frontier model or be there for the frontier model. And I've also seen a comparison with Apple, or like,
Mm.
"Well, yeah, but Apple didn't do it either, right? Apple has negotiated a contract with Google Gemini, and it's correct. But Apple is a hardware company, not a software company first. So they don't need a frontier model. It's not their main business, right? They just need to keep selling iPhones or MacBooks, and their goal is going to be on top. Microsoft is not there. They need to sell more Copilots. They need to sell like more Azure cloud providers. And so this was the main critique. Yeah, I have like also to see the last nail in the coffin is
Yeah.
that I mentioned how in the beginning, in 2023, Microsoft started to negotiate with OpenAI on some exclusive contracts to using Azure. So for a long time, public investors saw Azure as the main provider to this frontier model. That contract expired. And as of May, OpenAI actually signed a contract with AWS in how to expand their inference and chips infrastructure. So they also lost a significant portion of that contract, right?
Yeah.
Yeah, exactly. And that's why you see the 20% drop in expectations, right?
So 20% drop. Do you know how much it increased on the conversations of purchasing OpenAI back in the day?
Yeah, actually, good you mentioned. I have the numbers here in front of me.
Yeah?
So back to this was just before they started to have those talks with OpenAI. Their price per share was $240 per share. And then it started like what you want to call it, the AI hype. And in 1 year and a half, they went from $240 to $470. That's quite an upsurge. And then they had up and downs, but they got their peak exactly 1 year ago in August 2025 at $520 per share. And today, at the moment of talking, they are at $382 per share.
Wow. Okay, that's a massive
So
drop.
they're still up compared to January 2023 when all this like AI mambo jumbo started with
Yeah.
OpenAI. But if we look even at just the normal growth of, well, they should be around 425. I see here that the average one, they position it at, yeah, around $450. $452. So they're still $60 short.
So what's their plan now?
I mean, so this is my personal opinion on it, but of course we're
Yeah.
going to see growth. It's not that they are like, they don't have profits. They're having the same profits. They're growing still
Yeah.
quarter by quarter.
Hmm.
I think they have to have a better narrative when it comes to AI, right?
Yeah.
Their stock price was based a lot on the perception that they were on the same level of these AI frontier model providers. They were into the AI race, and Google, for example, is in this AI race, right? They have one of these frontier models, who's Gemini, while Microsoft isn't. And these are good lessons for all the startups out there. On sometimes you can sell by promising, right? By showing a narrative. They always say to sell with a compelling story. And Microsoft did it amazingly for the last 2 years. But at a certain point, the story has to actually converge with actually your plans, right? It has to converge. So I'm nowhere near the CEO of Microsoft,
Yeah.
but definitely what I would like to see from them is more compelling story when it comes to AI. So either developing a frontier model or getting some exclusivity again in contracts with the frontier models in AI.
Okay, so better communication, but you don't think they should double down on AI models then? Like throw
I think
money on that problem and figure it out?
I think
Do you
on
think
the
they can go on without doing that?
Yeah, it's a good question. I think they are one of the few companies that definitely has the capital and talent to try
Yeah.
to actually render Copilot as good as. If I were them, I would throw money at the problem. They're one of the few
Yeah.
companies that can. And now, if I can do an unfair comparison, isn't kind of what Google did, right? Bard was not really well perceived when they launched the model, and they kept improving it. And right now, I don't see as many people complaining about Gemini.
No, I don't think so. People are using it quite a lot, but that's exciting. Maybe there's going to be. I feel like Microsoft is such a strange company where people hated them forever. Or like, I feel like people have been annoyed with Microsoft since the dawn of time, but then their products are always cheaper. So people just buy computers with Microsoft on them instead of Mac and Linux is the other alternative, but that doesn't have all the software. It's just like they're always just a good enough solution to things, but they're not amazing. So I feel like this Copilot, it's just good enough again. And it keeps being fine.
It's fun that you mention it, actually, that you say like it was ill-perceived. I actually last year read an amazing book about Google Story.
Yeah.
And actually, it's co-written from Larry Page, so one of the co-founders of Google. And he mentioned exactly that when they launched, there was a lot of fear about Microsoft and how they perceived it as the Darth Vader of the Silicon Valley.
Yeah.
Because every time Microsoft gazed their eyes on something, they just copied it, made it better, and charged it cheaper. So they needed to stay under the radar long enough to be able to compete. And I mean, they did an amazing job, right? Today, Google is better than Bing at many things.
Yeah.
I personally do not use Bing, not as much at least, but they definitely, I would say, are nowhere near the market share of Google.
Okay. Well, we'll see how they figure it out. I'm sure Microsoft they will be fine. Like they have such a huge monopoly. They're going to train on all these user data and their model is going to become better or good enough at least. So I'm not worried about them.
No, I'm not. I mean, we're not worried either, right? I mean, they're still like a 2.8 trillion company.
Yeah.
They're like still in the top 10 best companies in the world. Still great lesson, right? To beware the narrative and deliver the promise, kind of. Even though there wasn't an official statement, the perception of the stock was this is going to be an AI stock.
Yeah.
Then try to be it.
So today I'm going to talk about angel investors. And the reason is because, we are startup founders and I think they are our most important partners, actually. So I thought, why not look into them? Who are the top angel investors in the world? And I found this article from November 2025. So it's almost a year old, but I found an article that listed the top angel investors in the world. It's from Beta Boom magazine. So I'm going to use that as a reference and then just let's look into some of their personalities. What is the definition of a good angel investor? This article defines it as how many exits compared to the number of investors. So if you divide that, you get an exit rate. So in front of you, you can see the top 10 angel investors. And you can see that the top one, Mark Andreessen, has a 72% exit rate.
I mean, it's insane.
And then if we go down, because I'm not going to go through every single person in this list, it then drops to 57%, which is also really high. I'm going to talk about Mark Andreessen, Bob Pasker, Keith Rabois, Kevin Rose, and Heidi Partovi.
I have a question though.
Yeah.
When you say an angel investment in this case, is there any range on how big the ticket is?
No, I didn't focus on deal size because I just wanted to look at their personalities and who they are. And I just simply used the definition this article has. So honestly, there's not that much information on them. So these are angel investors, which means that they invest in companies very, very early on. So those investments are not always public. And in many of these cases, you can't find that much about these people either. Let's start with Mark Andreessen. His net worth is 1.9 billion, according to Forbes. He's 54 years old, situated in Silicon Valley. In 1994, he founded Mosaic Communications Corporations, which then was renamed Netscape. It became the dominant web browser of the mid-1990s. So he essentially was part of inventing the internet from the perspective of normal people. Before that, you could communicate, you could use the internet to send information, but you couldn't really sign into something similar to a website. So you can imagine that that's a pretty major change, right?
My God.
He has a bachelor in computer science from University of Illinois. That's a good signal. Alongside with Peter Thiel and Eric Smith, he has invested a lot inside of the US defense industry sector. And he's actually really good friends with Donald Trump. And then he's a very controversial figure. He's actually doing this on purpose. So Andreassen's point of view is that when he invests in a company, it's good for that company that he is controversial himself. Generally speaking, the more out there we are and the more outspoken we are, the more controversial we are, the better for the businesses. That's a quote from Andreasen himself.
I only know one quote of this guy. That is that he doesn't know a single successful founder that is introspective. He says that that's a really modern concept. And that the most successful figures also historically, they did not need introspection. They just executed. And that's kind of the founder type he looks for, is the founder that just goes for it and doesn't really wonder that much about what did I do.
To me, this is so funny. Like he's such a tech person from my perspective. I mean, I studied computer science. I know that people who study computer science are usually like antisocial. Maybe they're like super knowledgeable, slightly rude. They love controversies. They love like testing annoying theories out just to create drama. Or this is my view of computer science people sometimes.
And I'm one of those, so I absolutely understand and I agree. Yeah.
Let's move on to the next. So next we have Bob Pasker. He also was a computer science major.
Okay, I start to see a trend.
And he's so interesting, actually. Bob Pasker, he was the second on that list. So he's 65 years old, and we don't really know his net worth because he is completely invisible online. But he founded WebLogic. He was principal developer and chief architect. WebLogic is like this layer between the back end of a website and the front end of a website. So he kind of invented that there should be a layer in between. This was bought by Oracle and is now the Oracle WebLogic server. He did that 1995 and he sold it 1998 and has since been part of many other startups, and he invested in plenty of companies. One of them that I recognize the most is Stack Overflow. And I want to show you his LinkedIn page, Bob Pasker. I am no longer using LinkedIn because the amount of spam it generates. This is his LinkedIn page. And it just says me, and he is in New York in the United States.
I love the blog.pasker.net. From my perspective, it's such an old domain name, right?
Yes,
.net.
he's such a tech person as well. From my perspective, I don't know him, right? But I feel like I know him just from this LinkedIn page alone. Like he's one of these guys that he doesn't even have internet at home because he doesn't want spam, you know. At the same time, he has such a high tech knowledge and can develop everything, you know.
I love him. It's not even HTTPS. It's HTTP. I love it.
Yes, actually, I didn't even notice that. So there's not that much to say about him because there's nothing about him on the internet.
He doesn't want you to know about him. Yeah.
Yes, but he's still the second on the list of angel investors. So let's keep going. Keith Rabois, his net worth is 121 million from Bazinga. He's 57 and he's a bit different. He's actually a lawyer. So this is the first lawyer on the list. So he really sticks out. So he is considered a member of the PayPal mafia. He was an early executive at PayPal, and that's kind of how he started his career within the startup sector. And he joined there as a business developer. Before that, he just worked at a law firm. But what's interesting here is that you could see directly the university is University of Stanford and Harvard Law School. You could directly see that these schools create investors and prominent people. So he invested in PayPal, LinkedIn, and Yelp. Slide and Square, I don't know what they are.
No, but already, I mean, you can already stop there, right? And be like one of the greatest angel investors of all time if you invested in LinkedIn, PayPal, and Yelp.
And then we continue. YouTube, Palantir, Lyft, Airbnb, Eventbrite, Wish.
Everything he touched became gold.
So he sticks out a bit. He's more of a law person that randomly entered into PayPal, probably because of his connections from Stanford and Harvard. And he is the same age as everyone else. I feel like it's a generation that all did the same thing. Okay, let's keep going to the next. It's Kevin Rose. He's 49. His net worth is 100 million, from California. But this guy, he talked about tech on TV, actually. Internet entrepreneur. And then he invested in Twitter, for example, and Facebook. But I didn't find that much about him. But you see, he's from California. He's a bit younger, 49. So
Yeah. I also
that's.
see 100 million net worth.
And then we have the last one I'm gonna note is the fifth one on the list, Heidi Partovi. He's actually not from the US, but he moved to the US. So he's 54, he's from Tehran, and he and his twin brother are both angel investors. So his twin brother is number 6 on the list. His net worth is $227 million, and he grew up in Iran, where he taught himself to code at home on a Commodore 64. And then he immigrated to United States, and he worked as a software engineer to pay his way through high school and college. He graduated at Harvard University with a master's degree in computer science, and then he started at Microsoft. He then founded 2 startups, Tell Me Networks and iLike, and now is investing. He invested in Facebook, Dropbox, Airbnb, Uber, SpaceX. So you can see, now I'm going to stop. 5 is enough, right?
I see that is crazy, but still the lawyer for me wins somehow. Is everything he touched was known to me, and it's insane. He kind of is everywhere. The only thing he missed was Google.
So now we're starting to see a pattern here that, okay, they're all male. They're between 50 and 60 years old. Most of them have a computer science background. All of them have created or worked top level in a startup. So they have that startup experience. So I see that if you're talking to angel investors, if we're gonna take some advice from this is what I take from this, at least, is that if you're talking to an angel investor, you can maybe assume that they did the same journey themselves, because it seems like most angel investors were a startup founder at some point in their life.
Actually, this one is something that come up also lately in a couple of questions and in my LinkedIn. This is from a peer-reviewed paper in how in venture capital is usually not the standard career ladder, like School of Economics, junior analyst, associate VC, and then general partner, but rather that you go from operator, like startup, and then you make an exit, into VC and general partner. So in the end, there are more general partners, so the ones that actually sign the check, coming from operators like these ones, rather than coming from the vertical ladder directly from School of Economics. So basically investors from investors, which is interesting. Right now, the list you're showing me it kind of reinforces that view that you need to be an operator or really close to the operators to actually maybe have that insight in doing good investments.
And you can imagine that 4 out of these all have a solid engineering background. They actually worked and invented software themselves. So when I say they have a computer science degree, it's not just that they did it and then they never worked with it. They actually developed these softwares themselves. They were major developers at these companies. So I suppose if you have them as angel investors, you're going to be supported from a tech perspective. You see that they all grew up in 95 during the tech revolution of the internet. So maybe it's changing. From now on, we're introducing AI. So maybe this kind of tech understanding is not as vital. But in this early 21st century, understanding tech has been the most valuable knowledge when building a startup.
But isn't it also a bit humbling that you see this list and you have people that this guy invented the concept of middleware, and this other guy invented the concept of a browser as we know it today? It's a bit humbling.
Exactly. But I think, okay, so the point, or what I was trying to do, it's not necessarily to say these were the top ones. It was more to be like, okay, what are the personalities of these people? Who has that type of personality to invest as an angel? And I think that this whole thing about being a startup yourself is the key factor. Like, if you haven't tried to create a startup, you're not going to invest in a small, tiny company, most likely.
I know I'm going to now sound entitled, but if I were to launch a startup, especially a tech startup, and I were to look for VC investments, I would only look for investors that actually used to be operators. I don't care if they exited. It's fine if they bankrupted or if their startup didn't go well, as long as they actually were in the trenches at least once.
So I got this question from a startup founder, Patrick, and he is currently creating a product. It's a tech product. It's going to be a SaaS business. He says it's working, but it has a lot of bugs. He needs a lot of extra work. So he's asking me, when is the right time to start with sales?
Yesterday.
So he kind of says from this point of view that, okay, he wants to validate that the product works and he wants to actually make sure that people like it and they can use it. And he wants to be ready to deliver at the moment he gets a sell. So he's like, I want to be ready.
No, so I understand it's scary sometimes to be in front of a customer or a prospect especially when they ask you, do you have something to show me? And maybe you don't have it or you don't think it's ready. But if you get to that point, it also means that they are interested. They have something. You can always say, okay, I'll be back to you in 2 weeks. Let's schedule a meeting in the future. I think me and you, right, Anna, we kind of prepared multiple times like Figma or Adobe drawings and designs just to show how it would look, so that actually the customer could point like, no, not like that, like this, don't call it like that. So we could actually iterate fairly quickly. And it took multiple iterations before we had actually something that is the standard lean startup playbook, right? Like talk to your customers and develop after. I understand that with today vibe coding and everything, it seems like, oh, but I can create a product like an MVP in 1 day. But the thing is, no, you cannot without your customers, right? That is still true. You have to go out there, talk to them before you build, even if you're a domain expert. That's my opinion.
So what about not being able to deliver once you have those customers then?
Yeah, that's a different discussion. If you are not able to deliver, okay, what does it mean here, not able to deliver? I mean, technically, like that the tech is not ready or...
Yeah, you sold a product and it doesn't exist yet. So
Yeah, I mean, then is all about what did you sell, right? And speaking about also the Microsoft that we talked about at the beginning, if when you're selling the dream and the narrative, amazing, but you have to also have a realistic plan. So either ask more money or be realistic with the timelines, right? Just try to be realistic. My advice then would be to split the POC, right? This pilot in multiple parts, maybe monthly milestones. So you can actually see that you're achieving and then you get paid per milestone. You get validation at each step and they get the risked product. I think this is the best way to do it instead of, okay, we're going to do a free pilot for 1 year. And then if we deliver, you're going to pay us €500,000. No, then split it in tiny payments, right?
Even if you're going to do a pilot with somebody and you're thinking, it's better that I test it because then I can make sure that it's working for people. But so from the point of view of the customer, they also have to invest a lot of time into your tool. And if you, after a year, can't market this product, it's going to disappear. So they're going to invest their time, their data, and they're going to build a system around working with your product. If you can't sell it, you can't actually sustain it, which means that you're also putting them in a bad situation. So for the good of everyone, you need to figure out market first, because the market then creates this nice atmosphere which enables you to solve problems with the product. If you have paying customers that's showing indication that you have a good product, which means you can get investors, it means that you can get money, and it takes money to actually build. I also think that sometimes people are a bit scared because they don't want to trick the customer, but actually it's the other way around. You're tricking them with these free versions that you can't afford to sustain.
Correct, yeah, because eventually you disappear.
Yeah, you disappear, and they invested their time and the company information maybe working with your product. So there's also that part of it that you need to, if you're going to be reliable, you need to have the funds to be reliable as well.
So Patrick, basically go out there and sell it. And
yes.
if you don't know how, invest in consultancy. Buy a sales book and apply it. Kind of doesn't matter which. A lot of good advice is out there. Find someone that did already that path, like Anna and I did, and find guidance.
Yeah,
but sell
absolutely.
from day one.
Go out there and sell.
Oh, Anna, I have a LinkedIn nugget for you.
Yeah, you do?
I do. So if you are the CEO of a startup
Yeah.
and you do not have branding, your YouTube is empty, your LinkedIn is empty, you're not going to succeed.
I don't think that's true. I think you could succeed, but it's going to be harder. I think it really depends on what your what you're selling.
So
What
you
do
have a
you think?
startup. Let's assume like a typical, I don't know, SaaS or
Yeah.
AI native startup.
Yeah. So I think it depends on your network. So the point of the brand is that once you do outreach, people already know who you are. So people don't like strangers. And the way to make yourself a familiar face is by branding. So you're kind of introducing yourself in this polite way to the audience. So once you reach out and you say, hey, I have a product for you, at that point, they already know you. They already know how you speak, how you look, and kind of they know what you're trying to do. So they already feel safe a bit. And that's the point of doing branding. I think it's a fantastic way to introduce yourself in this world that we live in. But if you have a product that is 100% solving a major need, like companies can't even survive without this product. If you have a good network so that you can just reach out to people or have warm introductions, or your product sells itself, then I guess you don't have to do branding. But most people are not in that situation. Or I am not. So
Yeah,
I
no,
have to do branding. What do you think?
no, I agree. So there is no free lunch. I see it as in the short term. It's not now saying like LinkedIn, YouTube, or whatever channel. They will consume lots of time, right? You might
Yeah.
need like an editorial content. You might need it like a ghostwriter or a content creator, or it's gonna even take maybe some money because you want to experiment with different formats and different like premium initiatives. So it will take money. It will take a lot of time. But as you say, but when you're gonna, if you do it correctly, when you're
Yeah.
gonna outreach, your name sounds more credible and plausible. Like your solution all of a sudden has more validity implicitly. So it's a long-term investment. And I see it, you're not gonna necessarily fail, but in the long term, you're leaving money on the table, right? That's kind of what there's only few exceptions that can like not do like this creative specific branding or really push on advertisement and channels. And there is the example of Tesla and Apple, but the thing is, you are listening to this are probably not the CEO of Tesla and Apple, right? And in that
Yeah.
case, push on branding. It will help.
Exactly. Yes, that's it for today, right?
That's it for today. Perfect. Thank you, Anna. It was great.
Thank you, Matteo. Okay, bye.